This is why you should be expecting a ton of volatility from here on out. I've got some crazy news from the Federal Reserve, and I'm going to dissect it for you a little bit. So right now, the Federal Reserve says they don't see a recession till 2027, till at least 2027. So what does that mean? Doesn't matter what your favorite person on podcast or Twitter live space or whatever, who's calling not a recession, this is a recession, doesn't matter. What the world cares about is what the Federal Reserve says and if there's a recession or not, and that will drive the markets, okay? That's all you need to know about that. Now, moving on, we have interest rates. So there's about a 28.5% chance that there's going to be a 25 basis point rise in the next Federal Reserve meeting coming up. And what does that mean? Absolutely nothing, because first off, you have to understand, as I've been saying over and over and over, I'm like a broken record here, that guys, the Federal Reserve is going to print so much currency. It doesn't matter what they're doing with interest rates. It doesn't. They're printing so much, they're going to bail out things. They're going to, like I said, at the beginning of the year until now, they are going to print more currency this year, 2023, than any other time in the history of the US, all in 1 year. And that is really good for Bitcoin because it loves monetary inflation. I've been in this space for well over a decade. I've seen it myself, okay? Next, we have the Federal Reserve being talked about by Bob Lucas, who's a great guy to follow on Twitter. He says, I think the Fed is more likely to lean further hawkish than dovish from the last meeting. So pretty much he thinks that they're going to raise rates just a little more. But he says, with that said, rates generally peak before a recession, as do market bottoms. So, you know, once that happens, it's going to be really interesting to see how far this market does explode upward, especially with a halving coming up very soon in just over half a year, and a spot ETF coming out as well. I don't see any reasons to be bearish at this point. I really don't. Now we have Jameson Lopp. If you haven't followed him on Twitter, I would definitely recommend that as well. He says Bitcoin's money supply is currently inflating at an annualized rate at 1.69%. 1 year from today, Bitcoin's money supply will be inflating at an annualized rate of 0.83%. He says, good luck getting that level of predictability from a central bank. Exactly, because you have no idea what their monetary policy is going to be the next month. But you do know that with Bitcoin, because you don't have to trust third-party crooks like the Federal Reserve, which is really nice. Speaking about what is happening with the Federal Reserve, its ripple effects are going overseas right now, especially with the UAE and India, who are ditching US dollars and using Indian rupees in oil trades. So that is a really big hit for US dollars. And as you can see with the DEXs, it looks like it's going to peel on over to the downside. And boy, that on top of what I've just said prior with like the halving and ETFs, I mean, we are setting ourselves up for an incredible bull market, in my opinion. And especially, we've been buying these dips, and our family of our CT club are buying the dips as well. If you want to check us out and see exactly what we are buying, the link is down below for our CT club. We will love to have you with us. Okay, lastly, we have Japan's largest investment bank, Nomura, launching Bitcoin fund for institutional investors. So what does that mean? It means that the whole world is like waking up to the fact that Bitcoin and crypto are not going away. There's no way you can put that back into the box. It's already out in the open, and it's going to engulf the world, as you've been hearing me tout for years on years. Anyways, that's all I have. Please like and subscribe, and I'll talk to you guys soon. Bye.